Today, I will explain in detail how to achieve a 300% profit on SPX in just one day. The gamma exposure profile shows how market makers will move the price, and thanks to this, we have a unique opportunity to see what is unavailable to 99% of traders. So let's begin. This is the gamma exposure profile on Tuesday, August 5th. All these values are updated a few hours before the market opens, and let's plot them on the working chart. First, it will be more visual this way. Second, especially if you're a beginner, when you mark these levels on the chart, you reinforce your understanding of why a particular level holds certain significance. So moving from top to bottom, the first thing that catches the eye is that the largest positive gamma values are located at the 6,355 level. When we plot this level on the chart, we mark it as a green line and label it as P1. Next, we look for the largest negative gamma values. These are the biggest red bars, and on Tuesday, they were located at the 6,290 to 6,295 level. We mark this level on the chart as a solid red line and label it as N1. The next step is identifying the gamma flip zone. A gamma flip is where gamma exposure shifts from positive to negative, and this is always a critical level. It acts as either major support or resistance. Additionally, this level serves as a market sentiment indicator, showing whether bullish or bearish forces dominate. As long as the price stays above the gamma flip zone, it acts as support, confirming that the price is in bullish territory, and bulls will likely maintain control. However, if the price breaks below the gamma flip zone, especially if it later retests it as resistance, that's a strong signal that sentiment is shifting. The price then enters negative gamma territory, which could lead to increased volatility and an acceleration of downward momentum. That's why plotting the gamma flip level on the chart is essential. Here, it's the 6,320 to 6,325 range. So we mark it on the chart as a light green level and label it as G-flip. Next, we analyze the absolute gamma distribution. In this tutorial video, we've already covered a similar scenario. When positive and negative gamma values form a clearly defined range, the peak absolute gamma levels will align with these same levels, further reinforcing them as support and resistance. Just by observing this setup at the start of the trading session, we can confidently open an iron condor, placing break-even points right at these support and resistance levels. This trade doesn't even need to be held until expiration. For example, if the market opens near the resistance level and you enter the trade, you could close the position early for a solid profit, say several dozen percent, if the price drops to the middle of the range within a few hours. No need to wait. Just take the gain and move on. Now, regarding absolute gamma values, let me remind you that when we analyze them, we're looking for one of two possible scenarios. First, there are days when there's only one major absolute gamma peak, meaning no additional significant clusters. In this case, we treat this level as a magnetic zone. For example, if the price is trading above it, we expect it to decline toward this level and linger around it for as long as possible. The second scenario occurs when there are multiple large absolute gamma peaks during the day, say another big cluster over here. If the price drops and reaches this level, we interpret the absolute gamma value as an improvised mountain reinforcing this support. Figuratively speaking, imagine this. The support level becomes stronger because the price must first climb this mountain to break through, requiring significant effort. However, if the price manages to overcome this peak, the breakout is highly unlikely to be fake. Once the price clears this mountain, it will accelerate downward until it hits the next major level. This is exactly how a classic support or resistance breakout plays out. You've probably seen it before. Price repeatedly tests a level, gets held back, struggles to climb this mountain, and then suddenly a powerful breakout impulse erupts in one direction. That's the moment when the real move begins. But returning specifically to Tuesday, August 5th, we can see that the largest absolute gamma values are located at the 6,355 level, while the second most significant ones are at 6,295. On the chart, the largest absolute gamma values are marked with a purple dotted line labeled AG, and the second most significant ones are indicated by a thinner purple dotted line labeled AG2. At this stage, we've plotted the most important levels we'll be working with, and these levels will remain relevant until the end of the trading session. However, in addition to this, our website features several other charts displaying dynamic support and resistance levels. One of these charts is located at the bottom of the main page. It shows dynamic support and resistance levels, which are recalculated in real time. The algorithm that computes these levels takes into account multiple parameters, such as call open interest, call option volumes, put option volumes, and much more. The key idea is that if the algorithm determines an increased probability of a certain move or, conversely, that a move is unlikely to materialize, these levels may adjust accordingly. For example, let's imagine the market opened at this point. We can see where the initial support and resistance levels were placed. Then, the price started declining and reached the support level. If, at this point, the algorithm determines that the price is unlikely to rebound back to the original resistance level and won't climb above 6,320, the resistance level may adjust downward to this new mark. This is exactly what happened on Tuesday by mid-session. The resistance zone had shifted down to 6,320. Later, the price rose to this zone, and the level indeed acted as resistance. What I'm trying to say is that even though the initial resistance was at 6,350, its recalibration to 6,320 to 6,330 didn't come as a surprise to us. After all, we had already marked this as the gamma flip zone in advance. Now, with the resistance zone dynamically adjusting to this level, it gained even greater significance. Let me reiterate, since the price was already trading below the gamma flip zone, we were already treating this level as resistance. But when the dynamic resistance zone also converged here from above, it further reinforced our conviction that this level wouldn't be broken upward for the rest of the trading session. However, our website also features another tab called Key Levels. This section displays all the most important levels as well, but they might slightly differ from what we see on this chart. Why does this happen? The reason is that this chart, just like the other one, is tied to volatility or, roughly speaking, to the probability of certain price movements. What I mean is that if on any given day, there's no expectation that the price will drop below 6,215 or rise above 6,400, meaning it won't exit this range, then this chart won't expand further. This design choice was made primarily to avoid misleading you. For example, in theory, there could have been much larger negative gamma values at 6,150 bigger than those at 6,295, and the largest absolute gamma peaks might have been located there. If all of that were displayed on this chart, a beginner might look at it and think, wow, there's something even bigger, redder, and scarier at 6,150. The price is currently here, so it must drop because of those massive negative gamma values below. I should go all in on shorts. But in reality, the price wouldn't even break the nearest key support level, leading to frustration. To prevent such confusion, the range of this chart is somewhat limited, just like the range of the other one. Essentially, it shows the same levels as here, but they're plotted horizontally with an added candlestick chart for easier reference. The key idea here is that if the day had been more volatile and there were signs of a stronger price movement, this range would indeed expand, showing you everything you need to know. However, on August 5th, there was no such need. The trading range remained within this area. But on the Key Levels tab, the chart range is intentionally wider because some traders like to peek behind the scenes and explore what's happening beyond levels like 6,400. To reiterate, this main chart doesn't display those extended zones, but some still want to check. For example, if on that day the largest positive gamma, the green zone we label as P1, had been at 6,450, it would have appeared differently on the Key Levels tab compared to this chart, where it would still show 6,355. Seeing it on the extended chart doesn't mean 6,450 suddenly becomes more significant. It just means that when looking at the bigger picture, there's an additional level that some traders might consider in their analysis. Personally, I prefer sticking to the range displayed on the main page. It keeps the focus on the most relevant levels without unnecessary noise. Nevertheless, this chart is extremely useful for appreciating the elegance of key levels. Take Monday, August 4th, for example. The chart displayed scattered, messy levels. Despite it being a strongly bullish day, I personally refrained from trading because I didn't like what I saw, neither in terms of levels nor from the gamma exposure profile perspective. Now look at the beautiful structure on August 5th. We have the 6,350 level. I won't go into detailed description of each value as everything is clearly visible here. Simply put, we see the blue zone representing main resistance at 6,350, which by the way coincides with the resistance level shown on the main page chart. At 6,350 we observe the blue zone, the dotted line, the green zone, the purple dotted line indicating peak absolute gamma values. This clearly shows there was no reason for price to move above this level that day, as there was nothing significant above it. We also see the gamma flip zone here. The price approached this level, paused briefly, broke through it, retested it as resistance, and then moved toward the support range of 6,300 to 6,290. The beauty and significance of this support level, which we identified early on this chart, becomes perfectly clear. Additionally, the key levels page provides valuable context about overall market conditions and the importance of these levels. We can also open the Open Interest and Volumes tab, and on this chart we can see that the maximum spread values between call and put option volumes occur at the 6,350 level, while the minimum values are at 6,290, which again reinforces the support and resistance levels we identified earlier in the day. Just below, there is another chart where all the key values, open interest and volumes, are aligned to a common level. The idea is that, for example, at the 6,400 level, there will be the maximum call open interest, while at the 6,300 level, there will be the maximum put open interest. Looking at this picture, we can see that the open interest for call options is significantly higher than that for put options, and roughly speaking, the open interest for put options might even go unnoticed. However, the point is that even though these values are smaller than the call open interest, they still represent the maximum values for put options. To make this clearer, all these values are adjusted to a single level. Within this example, we once again see that, at the moment, 6,350 is a very strong resistance level because key values have accumulated there. As for the support level, due to the clustering of key parameters, we can see the full significance of the 6,300 to 6,290 range. This further strengthens the key levels we have already plotted on the chart. Thus, we can form a very clear picture of what's happening. Using the gamma exposure profile, we immediately identified the range within which the price would move. We can use this information to set up an iron condor. Next, given the importance of the support level, if you didn't open an iron condor, that's fine. You can still enter positions from the support level. If you're trading more aggressively, for example, opening a linear long, you can place your stop loss just below the support level. Once again, I'm marking the brown zone based on what I see on this chart. Personally, I opened a bull put spread, and by the end of the day, this position yielded a 100% profit. But the analysis doesn't end there. We can see that the price is trading below the gamma flip zone, meaning it's in bearish territory. And despite the strong support level, any upside will be limited. Additionally, by this time, the resistance level on this chart has already descended to the gamma flip zone. This means we now perceive the gamma flip zone as the strongest resistance, above which the price won't break. I'm saying this because at that point, opening new positions was no longer advisable. You could have opened a long from the support level, targeting a rise to 6,325, but now you need to wait for the price to approach that level and prepare to take a bearish bet. At this moment, we can activate the most powerful weapon in our arsenal and press the power zone button. In previous videos, I explained in detail what it means, but let me remind you that we're only interested in two things. First, the maximum value, and second, the range. The maximum values indicate the level where the price is likely to head. We can see that, on that day, it was the 6,300 level. The Quant power line was at this same level, so we understood that the day would ultimately close around this mark. But when it comes to the range, we see that power zone values started dropping sharply above 6,330, which meant the price had no reason to move higher than this level. And despite the fact that the 6,355 level still stood out prominently, movement in that direction wasn't considered. Since power zone values were declining above the gamma flip level, this level became even stronger as resistance, and when the price approached it, we could open a short position expecting the price to drop toward the power zone's maximum values, the 6,300 level. When the price reached the gamma flip level, I opened a bear call spread. As a result, the price reversed from the gamma flip zone, started falling toward the support level, and the day closed exactly at 6,300, where the Quant power line was located. This line always acts as a compass showing where the price is heading. By the end of the day, the bear call spread yielded a 100% profit. And since the price didn't drop below 6,295, the previously open bull-put spread also brought a 100% return. Thus, that day presented an opportunity to open 3 trades that would have delivered maximum profits. But most importantly, we clearly understood how the price would move, we knew the perfect entry points for trades, and thanks to the Quant power line and power zone indicator, we knew with pinpoint accuracy where the price would close that day. All this information is available on our website. The link to it and to our community is in the video description. Happy trading and see you next time.